Dubai real estate has entered a very interesting phase. And right now, almost every investor is asking the same question. Is Dubai property going to crash after the recent regional tension? Or is this actually one of the best opportunities to buy before the market becomes aggressive again? My name is Khilesh Joshi, and in today's video, I want to break this down with real numbers, not emotions, not fear, and not the kind of social media noise where one person says Dubai is finished and another person says everything will double tomorrow. The truth is somewhere in the middle, and serious investors need to understand that. The first thing we need to understand is that real estate does not react like the stock market. In the stock market, if there is a fear, people can panic, sell in seconds. But in property, the reaction is slower. Buyers delay decisions. Sellers reject low offers. Developers adjust launches. Banks become more careful. And international investors take a step back to understand what is happening. So, when people ask me whether Dubai property is crashing, the better question is, are prices crashing? Or is the transaction activity slowing down? Because these are the two very different things. Let's start with the bigger picture. In the first quarter of 2026, Dubai real estate was still very strong. Total real estate transaction reached around 252 billion in quarter 1 of 2026. That was around 31% higher in the value compared to the same period last year. The numbers of transactions was around 60,303, which was also around 6% higher year on year. So before this slowdown, Dubai was not a weak market. It was coming from a very strong base. This is important because when a market cools down from record levels, it does not automatically mean the market is collapsing. Sometimes it simply means that the market is becoming more normal and more selective. Now, let's look at what happened after that. In April 2026, transaction value was reported around 65 billion. In May 2026, total transaction value came down to around 40.63 billion. That is a drop of roughly 37% month on month. The number of transactions also came down from around 17,792 in April to around 12,879 in May. So yes, there is clearly a slowdown. I don't want to hide that. The market has cooled. Buyer sentiment has become more cautious. People are negotiating more. Some investors are waiting. Some are saying, let me see what happens in the next 1 or 2 months. This is normal whenever there is uncertainty. But here is the part most people misunderstand. Lower transaction volume does not automatically means lower prices. It means buyers and sellers are not agreeing as quickly as before. Buyers are asking for discounts. Sellers are saying, I am not desperate. Developers are saying, I may give you better payment plan, DLD waiver or some incentive, but I am not going to destroy my pricing. So the market is not frozen, it is repricing risk. This is a very important difference. Now, let's talk about prices. Depending on the source, area and property type, Dubai's average price per square foot in June 2026 has been reported around 81,900 per square feet, with some market data showing medium levels closer to 1700 to 1800 range. This means pricing are not collapsing across the city. They may soften in some areas, especially where there is too much similar supply or where the product is average. But prime location, good layouts, waterfront communities, branded residences, villas, townhouses and properties with real end user demand are still holding much better. And this is the most important point. Dubai is not one property market anymore. Dubai is many markets inside one city. A weak apartment in an oversupplied location is not the same as a good townhouse in a family community. A random off-plan launch in a secondary area is not the same as a branded residence in a prime location. A small investor product with no clear rental demand is not the same as a rare waterfront unit or a villa near future infrastructure. So, when someone says Dubai will crash or Dubai will boom, both statements are too simple. The real answer is some projects will struggle, some will stay stable, and some will still perform very well. Why are the prices not falling aggressively? There are few reasons. First, Dubai has a high number of cash buyers. Many owners are not under pressure from mortgages the way sellers are in some Western markets. If they do not get the prices they want, they can simply hold. Second, rents are still strong in many communities. If an owner is getting good rental income, there is no urgent need to sell at a discount. Third, Dubai's population and business activity are still growing. People are moving here for tax efficiency, lifestyle safety, schools, healthcare, business setup, and global connectivity. Fourth, the UAE government has built Dubai into a global hub, not just a tourist city. This is why serious investors may pause temporarily, but they do not completely remove Dubai from their long-term plan. However, this does not mean you should buy anything. In fact, I think this is where the market becomes more dangerous for inexperienced buyers. From 2021 to 2024, Dubai was in a rising market where even average investment could look smart because the whole market was moving up. But now at this point of time, the easy phase is changing. From now on, the market will reward investors who understand the difference between price and value. Price is what the developer is asking you to pay today. Value is what the market will pay you when you rent or resell the property later. These two things are not always the same. So, if you are buying property in Dubai now, please don't only ask what is the payment plan. A payment plan is important, but it is not the investment. You need to ask deeper questions. Who will rent this property from me? Who will buy this from me later? Is there too much supply around me? Is the developer reliable? Is the handover timeline realistic? Is the location improving because of infrastructure? Is there a school, mall, metro, road expansion, beach, business district, or population growth story supporting this area? And most important, am I buying at a genuine discount compared to the ready market? Or I just paying tomorrow's price today? In today's market, I would use a simple 5-point investment filter. Number 1, low supply. I want something that is not easily replicable. If 10 developers are launching the same one-bedroom apartment in the same area with the same layout, that is not rare. But if you are buying a limited townhouse, golf-facing unit, waterfront product, branded residence, or something with a unique view or location, that is stronger position. Low supply gives you pricing power in the future. Number 2, real end user demand. Speculators can move a market for a short time, but end users support the market long term. If a family wants to live there, if an executive wants to rent there, if a business owner wants that address, if the lifestyle is strong, then the investment has a stronger foundation. But if the project only looks good in a brochure and there is no real rental or resale demand, be careful. Number 3, infrastructure growth. Dubai real estate follows infrastructure. Metro lines, airport expansion, new roads, schools, hospitals, beaches, business districts, and master communities can completely change the demand of an area. This is why smart investors do not only look at what the location is today. They look at what the location can become in 3, 5, or 7 years. The real money is often made before the full infrastructure story becomes obvious to everyone. Number 4. Discount against the ready market. This is one of the most important points. If you are buying off plan, you are taking construction risk, time risk, and market risk. So, you need a reason to accept that risk. Either you should get a better price, a better payment plan, a better unit, a better view, a better developer, or a better product than what is available in the ready market. If an off-plan property is more expensive than a ready property in the same area with no major advantage, then you are not investing smartly. You are just financing the developer. Number 5. Exit strategy. Before you buy, you should already know your exit. Are you buying for rental income? Are you planning to sell before handover? Are you holding for 5 years? Are you buying for your family? Are you buying for capital appreciation? Most people buy first and think later. Professional investors think about the exit before they enter. Now, where is the opportunity in this market? In my opinion, the opportunity is in negotiation. When the market is very hot, buyers have no power. Developers don't need to give anything. Sellers don't negotiate. Good units disappear quickly. But when sentiment becomes cautious, serious buyers can get better terms. Maybe you don't get a huge price reduction, but you may get daily waiver, a better payment plan, lower booking amount, post-handover payment plan, free service charges, a furnished package, or a better unit selection. These small differences can make a big impact on your total return. This is why I don't think investors should panic. But I also don't think they should blindly buy. The worst decision is to be emotional on either side. If you panic and stay out completely, you may miss good opportunities. If you get overconfident and buy anything, you may get stuck in a weak project. The right approach is to be selective, compare properly, negotiate strongly, and only buy where the numbers make sense. My honest view is this: Dubai property is not crashing, but the market is changing. The next phase will not be like the post-COVID boom where almost everything went up. The next phase will be more mature. Better projects will perform, average projects will slow down, weak locations may struggle, strong locations with rental demand, low supply, infrastructure growth, and good entry price can still do very well. In short term, we may see slower transaction volume. We may see buyers taking longer to decide. We may see sellers becoming more realistic in some areas. We may see developers offering better incentives. And yes, in some projects, prices may soften. But that does not mean Dubai is finished. It means the market is becoming healthier and more selective. Long term, Dubai still has what global investors want: tax efficiency, safety, lifestyle, infrastructure, global connectivity, strong rental demand, and a government that is moving fast. When you compare Dubai to cities like London, Singapore, Hong Kong, New York, or Monaco, Dubai still offers a very attractive combination of price, lifestyle, and return. That is why I believe serious international capital may pause for some time, but it will not and it will never gonna disappear. So the conclusion is simple. Don't buy Dubai property just because someone says the market will go up. Don't avoid Dubai property just because someone says the market will crash. Look at the numbers, look at the supply, look at the rental demand, look at the ready market comparison, look at the infrastructure, look at the developer, and then negotiate like an investor, not like an emotional buyer. Because in today's market, The question is not, should I invest in Dubai? The real question is, which property in Dubai is actually worth investing in? And that is where the money will be made. My name is Khilesh Joshi. And if you are looking to invest in Dubai or Abu Dhabi real estate, I can help you compare the real numbers, understand the right areas, and avoid buying the wrong projects at the wrong prices. If you found this video helpful, subscribe to the channel because I will be sharing more honest, data-driven real estate updates for serious investors. See you in the next one.